Hi, and welcome back, everyone. My name is Michael LeBlanc with LLC Private Wealth, and today we're doing our August 2024 tactical portfolio updates. We got a lot to cover, so let's jump right into things and start talking about what we're seeing in the economies, what we're seeing in the market, and of course, what we see in the portfolios and coming up for the portfolios. As always, my name is Michael LeBlanc, Senior Portfolio Manager of LLC Private Wealth. I look after all the managed portfolios along with Harold Leishman and Julian Godo on our team, uh, who work more on our more small cap portfolios, but we're not talking about those today. We're going to be covering off just on the tactical portfolio and what we see there. As always, these videos are for information purposes. Always give us a call if you have any questions about your particular portfolio or do your own due diligence, but we're always happy to help out whenever we can. So let's jump right into what we're seeing out in the economy right now. So August was a pretty volatile month, especially right out of the gate at the beginning of August. Mostly led by those big tech names, the Mag 7, which we've been talking about all year. Right at the forefront of that is Nvidia. We're going to talk about them because this week they've had their earnings report out. So we'll cover a little bit on that. But overall, the markets managed to hang in. The Canadian markets showing some decent performance for the month of August, and part of that due to the Canadian dollar recovering a little bit. We're continuing to see this economic divergence from the U.S. Their economy's slowing. We're not seeing recession yet. That's always a tough argument about recession. You know, we've talked about it before in these videos. Recession's backwards looking. So by the time you're in a recession, or you're announced that you're in a recession, you've been in it for about 3 months. Is the U.S. going to skirt a recession or be in a recession? It's really tough to say. I definitely don't think we're going to see what they call the hard landing or the sharp recession, especially during an election year and the first year of a president's term, whoever that might be, tends to be fairly decent. So overall, you know, what they call a soft landing if we do hit a recession, or just a temporary slowdown in the economy. Still some strong fiscal spending going on. Great productivity numbers down there. Unlike Canada, you know, which we have had weaker economic growth and lower productivity numbers up here, which has been pushing down on our economy, especially through the summer months here. Central banks, you know, globally are starting to ease. We've already seen the Canadian central bank cut in rates, and September 4th, we're expecting another rate cut in Canada. The consensus is pretty much we're going to see another quarter point, and hopefully the consensus right now is leaning towards a U.S. cut as they start to see the unemployment numbers start to creep up. So that's pretty much the big indicator they're going to be watching there is that unemployment number. Of course, inflation is coming into it, but for the most part, they're checking the health of the economy down there on their unemployment numbers. The U.S. election, of course, is always a bit of an impact, and things, as we saw last month, got thrown for a loop with the switch over from Biden to Harris. We can continue to see a little bit of influence there. You know, certain companies, especially if Trump gains more momentum, seems to be floundering a little bit in his campaign. The broader markets, broader markets. Really don't care who gets in as president. Broader markets just want to know who is going to be president. Each party brings their own set of challenges and benefits, and the economy is generally which way it's going to lean and which sectors are going to be favored more under different presidencies. So that's what we're looking for, is just kind of a clear path to who's going to be president. And as we mentioned last month, we saw a big momentum shift there, and that seems to be continuing. We'll see what happens as we get closer to the race as we move into September and the debates. Also, in the economic outlook, as I mentioned, Nvidia has all this year been dominating the attention of the markets, leading the pack for those Mag 7 tech stocks, which have really been driving the S&P 500. I know last month in our video we had the numbers, showing that, you know, for the first half of the year, if you took out the Mag 7 from the S&P. In fact, if you took out, I think the number was about 3 or 4 of them, the S&P was actually negative for the year. But the strong performance we've seen has been driven by those big tech companies, and that's where we saw a lot of volatility at the beginning of August. We saw Nvidia and all of them having a big pullback as people got a little nervous around their valuations. And also, a lot of people have done well, and when the sell-in starts, tends to trigger that profit-taking sell-off. So we saw though that weakness really sharply, amplified at the beginning of August, and the broader markets held in. In fact, in the portfolios, we're going to talk at the end about specifics, but the longer-term track record in the portfolios is about a 50 to 55% downside participation, meaning the portfolios drop about half of what the general markets have been doing, and they did actually slightly better in that first week of August. They really held in. The risk first approach has kept them solid, and we were able to pick up momentum in the balance of the month, we don't have the August performance numbers out, but it is positive. So it's just going to add to the numbers that I have for you at the end here for the end of July numbers. Canadian markets are starting to see a bit of a rotation, particularly into the interest-sensitive sectors. That just goes into what we've been doing in the portfolios already for about 6 months, and we actually increased that exposure in the last 2 months. Is around the banks and utilities, which are the interest rate areas. Not only because they're paying us a massive, massive yield in the portfolios, but they're starting to show a lot of strength as we start to see that inflection point on interest rates, as it not only starting to come down, but it's starting getting down to a point that it less affects their business, and they can really ramp up growth. Revenue and net income growth. There's the big difference between revenue growth and income. Obviously, you can increase revenue but still lose money. And in Canada, the U.S. has been a little bit of disparity there, as the U.S. companies have shown strong net income growth due to the margin expansions, while Canada's having a little bit more difficulty around that side of things. But the really big important part is earnings growth. That's what we target inside the portfolios. We're looking for companies not only who are making money, but continuing to grow how much they're making. And that's really crucial when we talk about, a lot of people talk about the valuations in the market today. What are you paying for the companies? Well, yes, things might seem a little expensive for some of the firms, but it's really how much more can they grow, or how much more momentum around those earnings can they drive, because it might look a little expensive today, but it might actually be a pretty big discount depending on where that earnings growth goes. So that's what we focus on in the portfolios, and that's really crucial in these times of valuation spikes, I guess, in the markets, is to really know the names that we pick. And that's why if you look at when we look at the performance numbers for the last 12 months, where we've had very little exposure to those Mag 7s at the end of June, the numbers was about a 1.89% weighted exposure to those, and yet the performance numbers in the portfolio have actually kept up with those benchmarks. So even without that heavy weighting in there. So let's take a look at where we are today. Well, the stock futures are higher, as I mentioned. It's been a strong month. The investors had to digest the Nvidia numbers, which were a little off. We saw the stock fall by about 9% on announcement. It has ticked up slightly, about 1 or 2%, while I was getting ready for this video. So we're starting to see the market rebound a little bit on it, but we did see weakness in Nvidia and some of those tech names. The initial jobless claims for the second quarter and the gross domestic products numbers, we're waiting for those numbers to come out later today, and we'll analyze those going into the long weekend. But really, as I mentioned, it's that unemployment number that we're looking at in the U.S. and Canada, but Canada's pretty much already turned that corner as far as the unemployment numbers increase and inflation coming down to 2.5 and lower in the last months. But in the U.S., we're really looking for those unemployment numbers to start creeping up a little bit higher. If we see a spike down, that might delay their rate cuts. But for now, right now, the consensus is we will see the rate cuts out of there. What we're watching for coming up here is the personal income and outlays for July, the Chicago Business Barometer, the the PMI numbers for August, and of course, Canadian's GP numbers for June. On the exchange side, the U.S. dollar has been pretty steady. It did have a little spike up early in the month. It's come off a little bit from its highs, and that expectation is continuing to stay in there as we go into the election. Of course, if they do have a rate cut, we might see a little bit of strength in the dollar. As the rate cuts come through, we might see that impact the U.S. dollar figures. The Canadian dollars, as mentioned earlier, had a little bit of strength in August, but pretty holding steady. Same with the euro against the U.S. We don't see much change there. They have been cutting rates. Obviously, if the U.S. cuts as well, we might see a slight movement, but we're talking about probably 1 to 1.5 cents total on the move between the U.S. and the euro. Oil prices were on track for some gains at the end of August here. Basically, on those economic data being a little bit stronger, it took away some of the fear of weakness in the economy or deeper weakness in the economy, and just overall supply on oil. The energy sector, when we talk about, the oil and gas sector, been a little lackluster through the summer. We have a couple of names in there. They've been doing fine, but really haven't pushed too much value, and we're looking for a little bit more growth out of them. Gold, of course, was the big story for the month of August, seeing it August 20th hitting its all-time high. It's come off a little bit of that, but it's still holding in. We expect that to continue. If the U.S. does cut the dollar, we might see a little bit more support pushing gold up. But the gold names in the portfolio have performed exceptionally well through this year, and August was a great month for the gold futures. So let's take a look at the key metrics inside the portfolios. Well, you'll see down here at the bottom blue line, that's our tactical portfolio. Now, everyone has their own custom mix to their risk levels. So I've picked kind of our middle, balanced growth portfolio that's kind of in the middle of the road. Year to date, sitting just shy of 11% at 10.9. On a 1 year number, sitting at 16, just shy of 16.5. So some really solid numbers. If we looked at our top risk portfolio that doesn't have any bonds in it, it's at just over 20% on the 12 months. So really keeping up with those Mag 7 names inside the broader indexes without having to take all that risk. And we really saw that at the beginning of August. How do these numbers compare? Well, I've got up there the list of all the other portfolios that Canaccord offers from outside managers, a couple of our internal managers that offer similar risk profiles, and the tactical portfolio has outperformed straight across the board over all the time zones. So the portfolio is doing exceptionally well. We're very happy where things are. We have been doing the sectoral shift, as I mentioned, moving more to those utilities, moving more to the dividend yields as those rates come down. That's really been benefiting the portfolio. We have raised some cash in there. We do have a little bit of concerns around volatility. Not that we think the names we have in there are overly susceptible. Really, where we've been raising cash is taking profits out of certain areas. We've had uranium in there. It's done fantastic. We've trimmed that. We've trimmed some of the tech names that we do have exposures to, just raising up some cash to allow us to take advantage if there are some dips into any of the names we have that we want to take advantage of, but more so if there's any new names that we're tracking that are just a little too expensive or a little ahead of our value models. If they pull back, it's going to allow us to jump on those and take advantage of it. And that's where the tactical approach allows us to reduce that risk when we get into more volatile periods, but really take advantage of the growth when we do get there. So if you're concerned about volatility, don't be. I really see volatility as an opportunity for us to make better returns and continue to have that tactical approach to really cushion things when we start to see the markets move to the negative. So that's pretty much it for August. As always, remember to reach out to us if you have any questions. If you want us to review your portfolios, if you have external portfolios you want us to do, we're happy to do a free review to just kind of show you what you're in, what you've got. Remember, we've had some really great videos out recently. Harold's done some interviews into some of the small cap names that have had really, really great traction, and a lot of people sending in great comments how much they enjoy those. Also, if you haven't checked out my videos on private debt, a lot of people have invested in these private debt funds. Go check those out. Really important. If you have any private debt, reach out to us because I will review exactly what you own. The problem with these liquid alt style of portfolios is you might not know what you actually have in there. And there's a lot of risk that they do not disclose that my videos highlight, but I'm happy to discuss it with you independently. I also did a great video on one of our positions is the CEO of Evolve, where we looked at our Canadian bank exposure, where we have that cover call strategy. It's paying a 16% yield for us, and it's really starting to show some momentum. So if you want to learn more about that, go check out that video as well. So with that, I'll leave you going into the long weekend and enjoy the start of your September. And I look forward to talking to you all in the coming months. Thanks very much. Take care.